All right. We're moving right along. Then we will have Miss Margaret Remy. Is Ms. Remy here? It's all yours.
Actually, it's Ramy, the French pronunciation, but that's all right. Good afternoon. My name is Margaret Ramy. I own Quick Prints in Meridian, Mississippi. In 1984, my husband and I decided to pursue the American dream and start our own business. We financed the startup of the first photo lab in Meridian with $5,000 borrowed from my parents. We scoured garage sales, bought furnishings from home, and purchased used or damaged fixtures when available. My husband was going to keep his job only until we got established, but at age 70, he is still working full-time to support us. While we love the service we're providing as the only remaining independent lab left in Meridian, I have literally paid more in taxes than I have been able to pay myself in 23 years. And our bargain hunting continues. In our technological and rapidly changing industry, equipment depreciates quickly and has minimal value in as little as 3 to 5 years. When I became concerned over the amount of property tax I was paying for a small, unprofitable business, I was made aware that I could request a printout of the listed property and the value at which it was assessed. I was shocked. Equipment was listed under brands and models I didn't own, and at prices twice to 8 times what I paid. I was shown the book, where if they didn't find my model, they just picked another brand, always at much higher value. After we relocated in an attempt to grow and expand our services, we were visited by a state assessor. In a printout after that visit, a wooden box that held the video recorder for leased security equipment was listed as a $1,000 safe. A wooden light-type box that was part of the accessories of leased equipment was listed separately at $1,000. A darkroom sink was listed for $1,200 when we installed it for $175. By the time I was finally told I could provide receipts for my property, I looked at 20 years of boxes and papers and just kept paying the taxes. For most of my years in business, my CPA sent in the renditions, but since federal accounting laws for depreciation and expenditures seemed to be in disagreement with state tax laws, the firm quit providing that service. The first year I was on my own, I failed to turn it in. In 2006, I received a second tax invoice after paying my tax bill on January 31st because what I thought was leased equipment was a dollar buyout and not a true lease. The same thing happened in 2007 because my records weren't changed in the tax assessor's office the year before. It was then we agreed to have a state assessor come back to reconcile the differences. Some of his explanations were that property is assessed at replacement value and that just because I got a bargain, not everyone might have had the opportunity to get that same bargain. It doesn't matter if it's a 25-year-old homemade bookshelf or a discarded scrap of Formica kitchen counter. If it is in the building, it is assessed by linear feet from the book. It didn't matter that I replaced the $900 copier with one from Office Depot for $199. I wanted to go over every line, but after talking about equipment, he said he'd gone over everything else and ended the visit. I didn't request a printout of that visit until January of this year, and we still had equipment listed that wasn't in my shop at the time of the visit. After refiguring my taxes in 2007, the tax collector said I was probably not aware, that according to the assessor's office, they had not received renditions from my CPA for a 5-year period, and I was being charged 10% penalty, including the one for the year I failed to send. What I didn't understand is this is not just 10% added to the tax, but by a 10% increase to the evaluation, which is compounded every year. Even though the CPA came up with copies of most of the renditions, they would not accept that. Right now, we're going through 40 boxes and 20 years of receipts and check stubs to reconcile our evaluations with what we actually paid. And the local assessor is working with me to come up with a final and fairest solution on the evaluations and whether evidence exists that would justify the rescinding of unwarranted penalties. Thank you for listening to me. I would like to ask two other things. Please consider repealing the inventory tax, which is in effect double taxation, and providing for the self-employed to have the exemptions that corporations have on their withholding taxes. Thank you very much.
Thank you, ma'am. Next is Mr. Jimmy Ladner, representing the Mississippi Assessors and Collectors Association. Mr. Ladner. Next, we got Honorable George Flagg. Next, we've got Mr. Billy Horton. Okay. So what we're going to do, we know a couple of folks are here, so we'll go ahead and put them on now. Mr. Horton? Mr. Billy Horton? You're on.
Come to my surprise, I'm a little early. Hello, my name is Billy Horton, and to the members of the commission, I just wanted to say that I suppose all my life I'm representing myself as a small business, and all my life I've wanted to be an entrepreneur, or at least wanted to own my very own business. And I did that starting around in 1985 when I started a videography business, Video Image Productions in Hattiesburg. My wife Peggy and I raised a family and very active in our community. And I mention these things because I realize the importance of taxes, what they do, and why they're necessary. But when I started my business, I guess we all go into it a little bit naive, but I wanted to be as informed as possible. I started it more or less as a hobby, but very soon I wanted to be a full-blown legitimate business. I opened a bank account, got a CPA, got some advice from him on how to do my taxes, and let him do all those things for me. I want to do everything that a legitimate business is supposed to do so that I could be an integral part of my community and give back to my community. But little did I know that over 20 years later, when the business finally went full-time and I had full-time employees, other than myself and my wife, that I'd be in debt to the State Tax Commission to the tune of $20,000 for uncollected sales taxes on our business activities. In the State Tax Commission rules, Title 35, Part 4, Subpart 4, Chapter 4, Paragraph 100, it mentions videography, but it doesn't really address the type of videography that we do, for the most part. However, further on down in that same code, in paragraph 200 under filmmaking, it does address our main business activities. And I quote from that paragraph: income from the production of a film, and emphasis here, such as commercials, promotional videos, advertisements, emphasis again, etc., is not considered the sale of a tangible personal property, and as such is not subject to sales taxes. In my opinion, and in the opinion of my CPA and other videographers in the state who do the same type of work that we do, the key words in that paragraph are the ones that are in bold, and that defines what is exempt from sales taxes in the state of Mississippi. And it indicates that there are other activities that are exempt than just those three listed. However, when I was audited by the employees of the State Tax Commission, only those three items were exempted from the sales tax collections. When I asked them to give me more examples of what such as and etc. meant, I was told that information could be found in the audit and the tax code, yet nowhere in either document can this information be found. Furthermore, while the audit was taking place, I was initially told that videotaping of depositions was taxable. Then, I was told a week or so later, it was not taxable. it was not taxable after the auditors had spoken to someone else. A week or two later after that, though, they came back and they said that it was taxable, but since they had told me that it wasn't taxable, they weren't going to charge me for the sales tax collections on that, but from that point forward, I had to collect sales taxes on depositions. I could go on and on about what a fiasco that audit was, but that's not really what the points that I want to make right now. Government should be about being fair to everyone and about encouraging commerce and free enterprise, among other things. Especially in Mississippi, it should be about helping build existing businesses and encouraging new businesses. I would even go further to say that it should encourage businesses in highly technical fields that employ people with highly technical skills and use high-tech equipment so that they can not only compete within the state, but so that we can compete outside of the state and bring more money into the Mississippi coffers and keep the citizens that we have with those skills here in the state. However, the tax codes barely touch on technological issues, and when they do, they're not understood by the typical business owner, a CPA, or even the tax commission's own people. Businesses really like it when there are clear, understood policies and rules which they can operate under. The tax code is not for my business because neither my CPA nor myself are still clear on what we have to charge sales taxes on. On the fairness issue, now that the commission has audited me and told me I have to charge sales taxes on activities that most other similar businesses do not charge sales taxes on, I'm at a distinct competitive disadvantage. When I told the auditors this, their only response was, give us some names. On some of our projects, we're talking hundreds, thousands of dollars in sales taxes that I have to charge. And nobody else in the same business that I'm in is charging that. And so why would they hire me when they can get it from somebody else that don't charge that? Another problem that we're facing is technology has allowed people with a camcorder to start their own business up. They work out of their homes. They don't charge sales taxes. They don't pay any kind of fees. And I'm having to compete with that. And I have to do that by either lowering my prices, which brings in less sales taxes, or just quit doing that altogether. I love it here in Mississippi, and I want my kids to stay here. I want my kids to be able to enjoy and to hopefully take over my business one day. But until the tax commission stops singling out individual businesses and looks at industries as a whole, those kind of things are going to be hard to do in Mississippi. Thanks.
Thank you. Next, we'll go to the Mississippi Farm Bureau Federation.
Thank you, Chairman Speed, and the rest of the members of the committee. Thank you for the opportunity to speak for the importance of agriculture to our state and our state's economy. My name is Randy Knight. I'm a Vice President of the Mississippi Farm Bureau. I'm also a third-generation dairy farmer in Rankin County. Me and my father operate about a 150-cow dairy. I run about a 500 stocker calf operation, and we're also pretty big in the timber business. Also operate my own wholesale ryegrass seed and baler twine business. Just like to, first of all, let you know that we did have a handout. If y'all want to try to look at it, we do have some numbers in there that are kind of different from what y'all had been given in the previous meetings. We have 42,000 farms in Mississippi, somewhere around 30 million acres devoted to agriculture and forestry. There's no doubt this industry will continue to play a major role in our state and our state's economy. Mississippi farmers are very productive and efficient. Nationally, we rank in the top 5 in the production of broiler, rice, cotton, sweet potatoes, and catfish. Mississippi agriculture generates almost $5.7 billion right off the farm before the processing of these products. The agriculture and forestry industry has created and maintained jobs within the state without the help of the taxpayer money or bonds. In the initial tax study, material was distributed to this committee on January 28, showing that ag, fishery, and forestry were said to contribute 15,493 jobs, or 1.3% of the Mississippi employment. In the handout each of you received today, we received that these numbers have been terribly distorted. They failed to represent the 42,000 farmers and their laborers that they work on their farms. A more accurate number for farm-related jobs is 256,460 jobs, or about 17.5% of the population of employment. It is important to understand that the farmer doesn't set the prices for the stuff that he sells. We buy retail and sell wholesale. Farm prices are at an all-time high. The costs of production are also at an all-time high. With the rising cost of fuel and fertilizer and feed, farmers are not really realizing the increase in the commodities we are selling. Finally, as an end on the taxation, it is equally important for this committee to realize how taxes impact the agriculture and the forestry industry. Because farmers are price takers, there is no means of imposing a tax through us that would pass on like many businesses. Therefore, no matter the tax method, property tax, sales tax, or a fee, it is a 100% tax on the farmer and must be paid entirely by the farmer. Mississippi Farm Bureau Federation believes that careful consideration should be given before changing the taxation method or the tax rate on any industry that has no control over the price of its products or goods. Thank y'all.
Thank you. I think that's our first speaker that hadn't used up all of his time. Next, I'd like to call on Mr. Walter Howell for the AARP. Mr. Howell. How do you do, Mr. Howell?
Thank you. I'm doing just fine. Good afternoon. I'm Sherry Davis Garner. I'm the Senior State Director of AARP. Mr. Chairman and the committee, thank you for this opportunity to address you. AARP is a nonprofit, nonpartisan membership organization and doesn't endorse political candidates or contribute money to political parties or political candidate campaigns. We represent people who are 50 and over who have independence, choice, and control in ways that are beneficial and affordable for them and society as a whole. In making this presentation to you today, I speak on behalf of Mississippi AARP's membership, which is 314,000 in this state, all who are taxpayers. Our members are not unique because they pay taxes. In my comments, I will reference a report from the John C. Stennis Institute of Government at Mississippi State University, and the report is dated March 23rd, 2008, and it looks like this, and it's before you. Portions of the report are included in the packet and information that I will refer to. I'm using data that's very credible. It comes from the John C. Stennis Institute, and it draws attention to those areas where Mississippi taxes are higher than the national average and where they are lower than the national average. It is AARP's recommendation for you to use this data so that you can more accurately make recommendations and develop better tax policies that are fair to Mississippians who pay taxes. Entitled An Overview of Mississippi General Revenue Receipts 205 and 207, the report provides a comparison of Mississippi per capita revenue sources with national per capita revenue sources in 207. These comparisons can be helpful to you. They show the categories where Mississippians pay higher taxes as well as those that pay lower when compared to the rest of the nation, and that's key. First, drawing on data from the Mississippi State Tax Commission for 207 and from the U.S. Census Bureau, federal tax, state, and local government's tax collection report, the Stennis report shows that Mississippi total taxes paid on a per capita basis were 12% lower than other states. Mississippians paid $2,190.81, and $2,487.50 was the national average. On individual income taxes, Mississippians pay 54% less than other Americans, and on a per capita basis, they pay $401.32 compared to $881.59 for the national average. We looked at corporate net income taxes. Mississippi corporations pay 71% less than the national per capita figure. Mississippi corporations pay $50.48 compared to the national average of $176.97. There are other taxes, selective sales taxes, where Mississippi's per capita amount is lower than the national average. The alcoholic beverages, public utilities, and tobacco products are lower than the national average, according to the Stennis report. In general sales tax, we find that Mississippi is at the high end. Mississippi's per capita general sales tax is $1,081.14 compared to the nation's $783.64. In general sales tax, we are 36% higher than the national average. When you compare Mississippi with the nation on 207 general sales tax as a percent of what the individual pays in Mississippi, we rank second in the nation. 3.77% of wage earners of their check goes to pay sales tax. Going back to tobacco products, Mississippi has the third lowest excise tax on cigarettes in the nation, and Mississippi's rate of tobacco consumption is among the highest in the nation. The Stennis Institute's report study does not give and does not provide tax source comparisons on groceries because 11 states are taxed in this country. But we know Mississippi sales tax is the highest in the nation. When you consider where Mississippi ranks among other states in health and business climate, you can see the need for reform. Forbes magazine ranks Mississippi 43rd among the 50 states as best for business, ranking us 47 in quality of life and 43rd in climate. In conclusion, you as the members of this commission, and indeed everyone in this meeting, has access to good health care, but we think that low-income, elderly, and the poor Mississippians should also have access to health care. Thank you.
Thank you, ma'am. Now I'd like to go back up. Mr. Gayron Sims. Mrs.
Thank you for letting me talk to you this afternoon. Y'all have had lunch. We haven't. We're business people, and we don't have time for lunch. We're working very hard in Mississippi with the small business associations and our local people, but we have a problem. It's between me and you. I didn't know if you knew that or not. We have a problem in Mississippi with the small business person trying to keep our head above water. But with the taxing that we have right now, it's hard to do. We're thankful for you. You are our representatives. You are the people that help us, and we're looking for that help now. We have other people, though, who don't pay taxes, and I wanted you to know about them. They're out there. They're in the woods. They're in the streets, and they're blatantly selling without being taxed. And they're not charging taxes, and they're not paying taxes. And we, as a storefront, are in front of people, and they know either we go under or we pay our taxes. I haven't drawn a salary in 6 years, but I put everything I have in my business. And I wanted you to know that I resent people who don't pay their taxes, so I can come to you to tell you that, hoping that you'll help us. I'm probably more compassionate than I need to be, and I don't want to cry or anything, but I need your help. We need to find these people who are not paying their taxes, and I can give you their names. I have had people turn in their names to our local authorities with no consequence. But they're selling, they're buying wholesale, they're selling retail, they're not paying income tax, they're not paying sales tax, they're not paying users tax, but they're out there. And Mississippi is losing in a big way. You're losing me because I'll have to go under because I'm paying so much tax, and I'm trying to stay competitive with people who don't pay any tax. I need your help. But I put this in your hands, and I'm leaving it there. Thank you.
Thank you, ma'am. Next, Mr. Jimmy Ladner, the Mississippi Assessors and Collectors Association.
Thank you, Mr. Chairman. Thank the Commission for its time. I'd like to talk to you a little bit about county assessments. We've heard a lot here today talking about different types of exemptions, different types of method of appraisal, what people need. Well, counties generate practically all of their revenue through the local assessments. When things are introduced, whether it be a special assessment method on Section 42 housing or inventory tax exemptions that reduce that assessed value, that burden is passed to the local homeowners and to the local property owners. When you talk about an exempting inventory tax, if you did that today without replacing it, every taxing district in Hancock County would see a millage increase, anywhere from 3 to 5 mills. There's other taxing districts in the state that I've talked to other assessors about, and we've seen that they would see a millage rate as high as 12 to 13 increase. There's no such thing as an exemption. There's a passing on of the burden. Inventory tax, look, there's not an assessor in this state that won't tell you it's the most regressive tax there is on a business. We agree with that. We're not saying that something shouldn't be done with it. But if you're going to exempt inventory, you have to find a continuous growing replacement for it for the local governments. If you don't, all you're going to do is see your local property owners pay higher property taxes. Not just on their homes, their car tags. It affects their light bill. Public utilities pay their taxes on millage. You see a millage increase, light bills are going up. Section 42, Mr. Timms talked about it this morning. We recognize that those properties should be appraised using the income approach to value. What we don't agree with is the method that's currently in law. We think that the income produced from the sale of the tax credits should be included in the income stream. Change the law to say that, and we're okay with it, because that's fair and equitable to every other property owner. Currently, it's not equitable to other apartment complexes, in our opinion. That's our point on that. We are seeing things, constant assault on the local tax base. County government gets their revenue from the local tax base. Every time there's an exemption on it, every other person in that county's taxes go up. Inventory tax. Right now, the local authorities have the option of exempting that for 10 years. It's there right now. If it suits the needs for the county or for the city to bring that facility into it, they have the option of doing that. So I'm asking you folks, when you look at these exemptions or these special methods of appraisal that these folks have come through and asked, remember what you do everybody else. You exempt inventory tax, and every person that owns a beauty shop, their taxes are going up. They're exempt on the first $5,000 of inventory right now. Every small business that has $5,000 of inventory or less, they're going to see an effective tax rate rise. So it's one of those things, be careful what you ask for, you just might get it. You know, I know there's been several small businesses here today. I feel for them. I grew up in a small family-owned restaurant. I know what it does. But trust me, we have to be careful when we mess with the county assessment, or we just pass that burden on. No such thing as an exemption. There's a passing on of the burden. I appreciate your time.
Thank you very much. Next, I'd like to call on the Mid-South Building Materials Dealers Association.
Good afternoon. My name is Bob Hellenthal, and I'm the Executive Director of the Mid-South Building Material Dealers Association. Chairman Speed and members of this commission, I appreciate the opportunity to come before you today and make a few comments. I'm here principally to talk about the inventory tax, which is an oppressive tax here in Mississippi. As the gentleman before me has just stated, a very regressive tax on businesses, and the privilege tax. Our association is proposing that this commission look at the implementation of the inventory tax and extend or modify its terms to indicate not an exemption but a credit of that tax. That tax would continue to be paid toward the local county assessor's office, and a credit would be issued on the recipient or the business person's state income tax. First of all, that person would have to derive a profit in order to claim a credit on their state income tax. That could be phased in over a period of time. At the present time, the inventory tax in Mississippi is approximately 8%. That's a very oppressive tax, and we represent members. I do some 350 independent building material firms located in Louisiana, Mississippi, and in Alabama. We are surrounded by two states, Louisiana and Alabama. Alabama has never had an inventory tax, and Louisiana went through this credit process a few years ago where they phased in a credit so that the parish people, or in our equivalency, the county tax assessors, would continue to receive revenue from the businesses located within the county, but then they in turn would receive a credit or be able to take a credit back on their Mississippi state income tax. At the same time, I would like to point out to you that the privilege tax here in Mississippi is based upon figures that are many, many decades old. In many cases, businesses pay a privilege tax of $25. We feel that that rate could be easily increased to $100 or even more, or percentage of sales in the case of a major chain organization. Those funds could in time be paid either to the state or to the county. If they were paid to the state, which presently I believe they are paid to the county, but if they could be turned around and provided to state funds as a privilege tax, that would offset the loss of revenue that the state would endure by the folks taking the credit. We feel like that the imposition of the inventory tax and the exemption of 10 years that is granted, or is at the right of exemption, a grant of the county officials, really works negatively, because you've got a case, for example, the Oric Corporation in Long Beach, Mississippi, was given a 10-year exemption on ad valorem taxes 10 years ago. They're currently headquartered in Cookeville, Tennessee, in Putnam County, Tennessee, because their 10 years ran out. So what I think this commission needs to be looking at very strongly is the granting of these tax exemptions, the inventory tax exemption, for example, to a business for 10 years, which will only allow that business to survive 10 years in Mississippi and then move somewhere else where they can garner the same information. These two taxes represent oppressive, regressive type taxation policies that are inherently negative toward the growth of businesses within this state. Thank you very much for this opportunity.
Thank you. Next, we have the Ms. Mary Margaret Bollinger from the League of Women Voters.
Thank you for the opportunity to speak on behalf of the League. We are a nonprofit, nonpartisan organization. We do not back candidates, but we do take positions on issues only after having studied those issues for at least a year. Our position on taxation is that we believe that the tax system should be fair and equitable, progressive, not proportionate. That is not the case in Mississippi now. The bottom 20% of income, the bottom 20% income people get 5.6% of the income and pay 4.5% of the total taxes, whereas the top 20% have 46% of the income and pay 46.7% of taxes. That's proportional. We look at the tax on food as one of the most regressive, unfair taxes that we have in this state. A family, if you look at the handout that I gave you, a family of 4, look on the last column. The family of 4 who are working for one of these industries that we're trying to bring in, they're earning $8.82 an hour, the 2 adults, each earning $8.82 an hour. They spend, with the 2 adults and 2 children, spend about 1/5 of their income on food. That's about $4.62 a day. It's a bare bones amount. If you look at the 7% tax on that $554, $38.78 goes for tax. That's not right. That $38 to this family of 4 means a great deal. They have no discretionary spending. The miscellaneous category that you see here goes for things like clothes, telephone, laundry. It's not going for luxuries. If we could give that $38 back to these people, they might choose to use it in the impact program that the Treasurer's Office has set up, and pay $38 a month starting at age 5. When their child is age 5, that would allow that child to go to junior college for 2 years. There are other ways that family needs that money to be spent. Thank you.
Thank you, ma'am. Next, we've got Mr. Tom Ramsey, the Rogue.
How you doing, Lou? Good to see you. Hi, my name is Tom Ramsey, and I represent a number of locally owned retailers, most notably the Rogue, located here in Jackson. Thank you for your time, and I promise to be brief. We've entered into a trying time and are trying our best to navigate through a difficult financial period in the history of our communities, our state, and our nation. Businesses are looking for any method, device, or practice to increase revenues, while at the same time consumers are searching for any way to stretch their budgets. Now, in most instances, these two desires would seem to be in direct opposition. But what my clients propose can help to unify the goals of businesses and consumers, and that is a one-day annual sales tax holiday. The holiday would take place on the last Saturday in July and would exempt from sales tax articles of clothing and school supplies costing under $100 per item. This measure has grassroots supports from the people and the merchants of this state, and has top-down support from local and state government leaders. It's a strategy that has been proven over time in other states and has been shown to have a net positive impact on local and state tax coffers by increasing overall sales receipts even on non-exempted items during the period of the sale. Retailers in Alabama, Florida, Louisiana, and other states have reported crowds of shoppers similar to day after Thanksgiving sales for the Christmas rush. And surveys have indicated a significant increase in shoppers traveling from out of state to take advantage of the sales tax savings. A couple of years ago, I was hosting a party, a getaway for a weekend, and 2 of my guests said they had to leave the party early to get back to Birmingham to go shopping because of the sales tax holiday there. If you can get somebody away from a party that I throw to go shopping, you've done something. Now, in most states, including Mississippi, the sales tax rate is less than 10%, and on most items it's 7%. If you open up the newspaper on any given day, you'll see sales of more than 10% at any store. So why would a sales tax holiday generate so much traffic? Well, it's simple. The average American consumer feels overtaxed. They're constantly reminded about what they pay to local, state, and federal governments. But you already know this. Every time you open up your paycheck, you see the big bite taken out. When you look at the average grocery bill, you see enough taxes taken out to buy a couple of nice steaks. And each month when you pay your mortgage, you're reminded of your property taxes. When you fill up your tank, you're reminded of the taxes you pay on gasoline for that $3.50 gallon. And then twice a year you get big reminders in Mississippi, once when you pay your car tag and the other on April 15th. So when given the opportunity to legally step out from under the burden of taxation, even if it's just for clothes and school supplies on one day, consumers will leap at this opportunity. It's a form of polite protest. For people who would never march in the streets carrying a banner, for one day a year, they can protest by doing what they do best, which is shopping. Now, some opponents to this proposal say the sales tax is the lifeblood of the municipalities and the state, and that stripping away the revenue would be harmful. But let's look at what goes into making just this shirt, and what taxes would remain if our proposal is accepted. Well, starting with the cotton farmer, they pay taxes on the land, the tractors, the seeds, the pesticides, the employees, and the income from selling the cotton itself. The cotton's then hauled by truckers who pay taxes on their income, their employees, their rigs, their diesel, and the privilege to use the roads and bridges. The cotton gin pays its round of taxes before sending it down the line, and the textile mills that make the fabrics from the cotton pay taxes on their employees, their income, and then ship off the bolts of cloth with more truckers paying more taxes. The factory that sews the shirts ponies up their share of property income and employment taxes before sending the finished product along to the store, where a whole other round of taxes is paid. And finally, the consumers come along and they pay one more time. Now, it's amazing this shirt doesn't cost $1,000. Even though it is from the Rogue, it's not quite $1,000. All that we're asking for is that one day, each year, we give a break to the consumers and a boost to the merchants. They both deserve it. Thank you.
Thank you. Next, we have Harold Neal and Susan Upton.
Thank you, Commissioner, and for y'all taking the time out to listen to us as a small business. And I'm talking on behalf of the NFIB, which I'm a member of, and there's about 3,500 members in the state of Mississippi in the small businesses. But today, we as small businesses would like the inventory tax repealed. And we pay taxes on our inventory basically 3 times. I know there's some talking about against that. But our inventory and our personal property taxes, we're assessed every year, and we pay taxes on them. They have come to my store on Airport Road each year and assessed the furniture that I have in the store. And just one item that was there was an antique. It had something sitting on it. Simply because it was there, they taxed it. It was going to be delivered to my partner's home. So it's there. It's taxed on that. Now, inventory tax, privilege license tax is also based on your inventory. And we pay again on our inventory. And the third tax is our sales tax. So we're paying 3 times on the same items, not at the same rate, but 3 times. And we can look at that as detrimental to us in different ways and detrimental to our state, because we have 2 neighboring states, Alabama and Tennessee, has no inventory tax. I think it's been mentioned earlier, and one of the guys that was speaking. Our neighboring state to the other side, Louisiana, has adopted a full tax credit. And this may be the way we have to go, because I know our municipalities and our county government has to have taxes to survive too. But when you overburden the small businesses, which I think is the backbone of the state of Mississippi, We have some large businesses here, but they have an opportunity that we don't have because they don't have to locate in the state. And we need warehousing in the state of Mississippi to store carpet in so that I can go pick up, and makes it easier for me to deliver and I don't have as much freight. But because they don't locate here and don't inventory here, then I have to ship it in from out of state, which costs me freight on top of having to pay taxes. At the end of the year, we try to lower inventory. So this can cause us loss of sales at the end of the year. If we don't have the inventory to sell it, then we don't pay any sales tax. So it reduces the tax basis by which we're trying to keep from paying the inventory tax on as much as we have to. So that, and I know there's companies that are located in the state of Mississippi, just one in Vicksburg over here that I read in the, I think the Vicksburg Post, where they have left the state of Mississippi because they asked for a reduction, just a reduction, or to not have to pay inventory tax. So they've moved their business out of the state to another state. As I said, large businesses can do that, even though they need something here, the access to the interstates and to the river and everything that we have here that we have to offer a lot of businesses. I'd like to see it repealed for the simple reason we can bring more business into the state of Mississippi. Thank you very much, and I have given a copy of this that you will be receiving to each one of you. Thank you.
All right. Next, we're moving right along here pretty good. Next is Mr. Al Sage.
Hello. Thank you all for inviting us here today and giving us the opportunity to make our comments. I'm Tom Dunlop from McClure Williams Company, and this is Ray Long from Long Wholesale Company, and we're here representing the Mississippi Wholesale Distributors Association. We're representing all the distributors in the state of Mississippi that distribute tobacco products. Tobacco tax is a very sensitive issue, and it has been for several years, and we wanted to give our views on the tax and what it should be or what it shouldn't be. We, of course, would not like any tax increase, but we realize that's a pipe dream. So we would like to see the cigarette tax doubled from 18 cents a pack to $3.60 a pack, and no more than raised to 50 cents a pack. 50 cents a pack is the average of the 4 states that surround Mississippi. And if we get out of that range, then we're going to start a black market situation where people are going to go to other states and spend their money in another state, or they're going to go on the internet and buy it on the black market. And so we would very much like the cigarette tax to be kept to a reasonable amount. The second proposal that we have is one of the lifebloods of our business is stamping cigarettes, and that's how we collect the tax for the state of Mississippi. We are the tax collectors for the state of Mississippi. And anybody that employs people knows that it costs a lot of money to do that. We have stamping machines. We have people that stamp the cigarettes. We have people that go out and collect the money. And we have to borrow money to pay for the stamps. We have to borrow money to finance the inventory for the accounts receivable. There's a lot of costs associated with collecting this tax for the state of Mississippi. If I sell a carton of cigarettes or pack of cigarettes and somebody doesn't pay me, I eat it, but the state gets their money. And that happens more often than you would imagine. The average tax, the average discount on the 4 states that surround us is 4%. And right now, our blended rate of a discount is 6.44%. We would like to keep that on the additional money if there is an additional tax. If not, if that's not feasible, we would like it to be 4%, as all the other states around us are, and the drop dead figure is 2%. If it were less than 2%, then we'd have to close our doors. And the third proposal that we have is a weight-based tax on snuff. We really don't have a dog in that hunt, but we think it's unfair for to charge on the value of or the weight of the product. You've got a snuff that sells for $5 a can, and you've got another one that sells for $1 a can. The weight-based people want to put the same tax on the $5 can as they do on the $1 can. That's like charging the same amount of sales tax on a Cadillac as you do on a Volkswagen. And we think that's unfair. And also, it's additional record keeping for us to do it by the weight-based, because there's all different weights. And it's easy for us the way the system is now. Now I'd like Ray Long to say a few words.
Thank you all. Very quickly, keep in mind, please, that Alabama is 42 cents a pack. We're 18 cents. So if you raised it to be equal with Alabama, it'd be $4.20. There's 10 packs in a carton of cigarette. We'd like you to keep that in mind. Louisiana is 36 cents a pack, $3.60 a carton. On the snuff thing, keep in mind that all we do now is take an invoice from U.S. Tobacco or any other tobacco company, smokeless snuff, and we pay the state 15% of the total amount of that invoice. It's very simple. It's also very easy for the state to check us on that. If you go to this weight thing, our computer won't even do it now. And so we've got to figure out a way to do it. It's very complicated, and I don't know that anybody could check it correctly. It's very difficult to figure out. So we ask that you just leave it alone like it is. Thank y'all.
Next, we'd like to have Mr. Richard Lehman, Citizens for Equitable Taxes.
First, I'd like to thank Chairman Speed and this Tax Study Commission for allowing us to address our concerns with taxes throughout the state. I'm Richard Lehman, President of Citizens for Equitable Taxes. CET is a nonprofit, nonpartisan, non-discriminatory grassroots organization. We formed it in Carroll County several years ago and have expanded to include 14 counties. I do not profess to be an expert in tax restructure, but I feel as though I am an expert at paying taxes. I bought my first land at age 16. I still own the same land and approximately 3,400 more acres. Consequently, I've been paying taxes for 48 years. Much has been said about the tax swap, thus reducing grocery sales tax and increasing cigarette tax. I brought with me today the published notices of tax increase in 3 school districts in my area. Ad valorem tax collections at present, the percent of the total budget for Carroll County is 21.6%. This requires approximately 28 mills. For Montgomery County, tax collections of the ad valorem tax collections make up 30% of the total budget, which is 35 mills. For the Winona Municipal District, ad valorem tax collections make up only 14%, but that's 49 mills. Winona School District is strictly a municipal district, which requires 49 mills to finance only 14% of its total budget. If sales tax revenue were lost in the Winona District, it would be almost impossible to recoup that loss through increased millage. Congress has just passed an incentive farm bill to our president. More than two-thirds of the $300 billion farm bill already goes to food stamps that states collect no sales tax on. Any shortfall from sales tax revenue at the state level would have to be passed down to the local level, thus forcing increases in ad valorem taxes. Ad valorem taxes are already allowed to increase at 10% a year plus any new growth, while the consumer price index has only been growing at 3 to 5%. How can we continue to allow government spending to grow faster than the consumer price index? The taxpayers in rural Mississippi cannot continue funding the shortfalls or unfunded mandates that will be created by any reduction in grocery taxes. The grocery tax issue is not broken, but school boards' ability to levy taxes certainly is. Excuse me. Rural Mississippi has continually seen their ad valorem taxes increase during years of supposedly no tax increase. At a budget hearing at one of the local school districts, I asked one of the school board members, why are you increasing taxes with nearly $8 million in the rainy day fund? The answer was, because we can. The law allows it. Later in that conversation, I was asked, why are you addressing this board? Go to the legislature. So we have continually tried to work with our lawmakers to resolve situations that seem unfair to local taxpayers. Supervisors should levy the taxes. The school board should only educate the children. In conclusion, do not complicate the issue with any tax swap that will not work. Stop the burden of continued ad valorem tax increases. Control government growth so business can continue bringing jobs and tax revenue into our state. Thank you.
Thank you. Going back and checking some of the folks who weren't here earlier, Honorable Robert Clark, or Representative George Flagg. That completes everybody that has signed up on our list here. Is there anyone else who would like to speak to this group today? Come forward.
My name is Richard Balls. I'm Professor Emeritus of Economics from Millsaps. I just would like to bring to the attention of this commission that there may be a discrepancy in the way realized capital gains are taxed by the state income tax law. Some people do not pay income tax on the capital gains, and some people do. It's an issue that probably concerns equity, because income is income and it ought to be taxed. Thank you.
Thank you very much. Anyone else would like to be heard? If not, that will conclude the public portion. Now, what I'd like to ask the members of the commission, if you would, let me give you my email address. It's leland.speed@eastgroup, EASTGROUP.net. I'd kind of like to just poll the group. If you've got any specific, strong observations that you have taken away from what we've done here today, let's don't wait until we get together next month. If you're like me, you'll have forgotten half of it. Leland.speed@eastgroup.net. And what I thought we'd do is we'll compile this and then circulate it among ourselves, so we can start getting a little bit of a feel for what's going on. And if you have any other suggestions on what you think we need to be doing and not doing, stick that in there too. We have our six, excuse me, Charlie?
Mr. Chairman, I understand how people, especially small business people, are frustrated with the government, but I also have an idea that there are an awful lot of small business people who are trying very hard. They're working very hard, but they do not know what they're getting into when they start a business. And that frustrates, they become very frustrated trying to deal with bureaucracy. And so I just have my observation over the years of having dealt with a lot of people very similar to many of those who have been here today, is that they want to do better, they save some money, they get started, but they really don't have very good background in economics, finance, accounting. They got a strong back, they got a good mind, and they want to work hard, but they fail on the front end. And I think that's obvious when you look at the small business statistics that show something like 8 out of every 10 new businesses failed in the first 3 or 4 years. I think a lot of that, we're seeing some of that today as people come forward and tell us what they're having trouble with. So I don't know that it's the responsibility of this committee, but certainly there are several different programs where people could go early on in trying to start their businesses, and that may be something that we might want to recommend to the legislature, that they try to look at providing additional help in the small business area.
I'd like to ask you also to please read this material that we're inundating you with. Particularly read about 4, 5, or 6 of those reports from these other states, because these folks have already gone through this drill and gone through a lot of pain and suffering that hopefully we can benefit from their experience. And now we've got our 6 subcommittees, and your subcommittee chairman will be contacting you. And to save time and energy and gasoline, we're going to try to see if we can't do most of this subcommittee meeting on video conferencing. We think we've got a setup, and so if you would be looking around in your neck of the woods, wherever you are, where you can tie in on this, or we'll help you with it. We will be in touch with you, and we'll get started with the subcommittees, because a lot of the action is going to take place in these subcommittees, getting into the nuts and bolts of tax exemptions. This very sensitive subject that I think we got a little education on here today on the effects of changes that potential changes might have on counties and on cities. Just want to say one more time to everybody here at the table, thank you so much for investing your time and energies in this endeavor. It's something that we need to do, and I think we're going to do it. Thank you very much. Anybody got anything else?
The next meeting, someone had said earlier today that you had mentioned that the next one was going to concentrate maybe some on cities and counties and roads.
Correct.
The next meeting, as I understand it, is going to be on Tuesday during the county supervisor's convention on the coast. So that might be a little difficult for some of us to participate in. But we'll consideration.
Okay. Thank you very much for being here. Meeting adjourned.